You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite, I know at least it's my favorite, bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the Options Insider Radio Network. And upon said network, you can find quite a few things, including over 400 archived hours of option block goodness. Yes, that's a lot of goodness to bite into, listeners. So set aside some time. Hopefully you got a few plane rides, a nice long commute. You can really sink your teeth into them. I know a few of you have written in saying, hey, I'm going through the archives, and more power to you. That's awesome. That's a lot of information to sort through. So hopefully you guys have some time on your hands. Sounds like at least a few of you do. And of course, where can you find all of that fun info? Well, the mothership, theoptionsinsider.com, as well as iTunes, Stitcher, Aha Mobile, TuneIn, all that fun stuff. Someone wrote me the other day saying they have that cool new Amazon Echo speaker, and you can just tell it, hey, listen to the Option Block from TuneIn, and it was able to do it. I was like, that's the coolest thing in the world. So you can listen to our stuff pretty much anywhere you have access to the internet or just a speaker these days, and you could do it. All right, and joining me on the old program today, starting off with the man of many watches and also many, many fine hats. He is the Viceroy, a.k.a. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Mark, good to be here, and a lot of interesting undercurrents in the market today. NASDAQ at a 15-year high, S&P just under the 2090 level, the Dow within striking range of 18,000. Bunch of good stuff and a bunch of real good kind of underlying strength in the market. Nothing but green lights on my screen, with the exception of Tesla and Baidu, which both had news. But if you're bullish, a good day overall.
Yeah, not a bad one at all. Speaking of bulls, we also turn our attention now to that most diehard of bulls, Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back and congratulations on yet another bullish day.
Oh, it's always exciting. The market just goes up all the time. I don't know what we even bother talking about.
Yeah, it's not really. We could just say, hey, buy them and go home. And
buy some Apple too, for the record.
Just in case. I think we'll get to that in the show as well today. Just maybe a few things going on out there. But before we get to that fruit company, let's turn our attention to the far shores of the country, to a little known area a few people live in called Maine. It's kind of under about 8 to 10 feet of snow right now. And peeking his head out from that snow is the rock lobster himself. Bit of a frozen rock lobster these days. Mr. Andrew Giovinazzi from The Pit, as well as a few fun programs on the old network. Mr. G, welcome back to the program, sir. Hope you're not buried under too much snow.
I'm doing my best Eskimo imitation right now. I'm poking my head out of my igloo and seeing if the sun is shining, which it is not. It's snowing.
You guys are getting pelted back there. That's crazy.
I think there's even people that have lived here a long time said, yeah, there's a lot of snow here now. So there's a lot of snow.
That's when you know it's really piling up. It might be too much even for the hot skates at this point.
I'm going to go skating after the show.
Yes, you're a Mainer. You're a diehard. How'd you ever live in like San Fran and stuff, places where there is no hot skating?
I went out to eat a lot.
Yeah, that's true. That's true. You do a lot of that. Speaking as someone who lives in downtown Chicago, we do a lot of that. Not so much on the ice skating, but a lot of the eating out. All right, and with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. For those of you playing the home game, we are recording this on Thursday, February 12th. You'll be tuning in on Friday, February 13th, Friday the 13th, an auspicious day, or whenever you guys decide to tune in, how many weeks, months, or years down the road. We welcome you all nonetheless. And as Alex alluded to, a bit of some green on the old screen today. S&P closing up nearly a full percentage point, a little bit over 19 handles to 2,087. The Dow, the laggard at only 100 points, or about 0.6 of a percentage point, to about 17,962. The Q's leading the charge on some strength from Cisco and a few others, up 1.2 percentage points to about 105, but it's about 106. And VIX cash, of course, ticking to the downside, down about 1.66 points to about 15.3. A lot of stuff cooking in the old market this week. So I think we'll start in Uncle Mike's neck of the woods, because a few things have been cooking over there since the last time we talked. Of course, his beloved fruit company on the rampage these days, moving up yet another 1.3% today to close at about 126.5 on the day. Getting some love from Carl Icahn, of course. They very recently were the first company to cross the $700 billion threshold. I mean, these numbers are just getting just astronomical. It's kind of hard to wrap your head around them at a certain point, but still, they continue to grow, and as I'm sure Uncle Mike's client base continues to grow and has a lot of happy smiles on their faces. So, Uncle Mike, walk us through what this past few days has been like for you in the Apple land, as well as what else is catching your eye in the markets these days.
Well, the first thing I did is I called up Carl Icahn, and I called the CEO to Apple. I called up the jobs company because they all listen to our show, of course. And I apologized. I apologized for selling the 120 calls like I did, or the 119 calls. And so I rolled them up. I told them it was a small percent of my position. I got out of those calls at break even. And so they accepted my apology. And then so I said, okay, well, so I'm on good terms with all the Apple people again. And so now the stock went up. This is just, I'm back to where I was a couple of years ago, to where I still like Apple. I think it's a great company, but you'd like to think it's going to end at some time. But in the meantime, let's just buy stock and buy a few puts, because who knows when it's going to end. Put our hands in the air and just smile as the account balances go up. That's kind of what I'm thinking on it.
Well, a lot of people following suit, buying stock and buying puts out there in Apple. In fact, it's getting so much juice, so much love on the put side of the fence. Even our friends at Bloomberg are starting to notice this. We know when Bloomberg is writing about SKU, I mean, they go down the rabbit hole every now and then, but when they're writing articles about Apple SKU, things have gotten a little bit interesting. They came out with an article recently talking about how they, of course, talk about SKU. They talk about the 10% out of the money calls and puts. They say it's about a 2.5 point premium right now, vol premium. Puts over calls. That's data from about a week or so ago. That's the highest they've seen since October 2012, at least according to their Bloomberg data. And Bloomberg has some data, so they are certainly reliable on that front. And of course, that kind of shows you, Uncle Mike, a lot of people playing that game, buying the stock, or in this case, having kept the stock, and then now are just doubling down on some puts to the downside. At a certain point, you're right. You do kind of have to wonder, when you're coming in and picking up protection at these levels, is that the scenario you want to be in, or is it perhaps time to move on to other pastures? Interesting. Certainly, it has not been time as of yet, and you certainly have to take your hat off to Icon. It must be nice to have that sway. We can just come out and say, hey, I'm along this. Let's talk it up, and it works out pretty well in your favor.
Yeah, I mean, that's why I'm glad he's a good friend of mine, even though he has no idea who I am.
I think that
Carl loves you, Mike.
Facebook friend.
Yes,
He's a Facebook friend.
Yes.
There you go.
Carl loves you. Every time I see him, he says, "Hi, how is Uncle Mike?"
No, that's good. Give him my warmth. Give him my best.
I think when he heard that you were right in that 120 call, he said, "That's it. I'm going to blow this guy out of the water." And you knew you weren't holding on to that call for very long. I was just waiting for you to pull that trigger. How soon after the 120 handle did you roll that?
Pretty quickly.
120.01.
I rolled it up the same week up to the 122 call, and so I got it. The debit I paid was similar to the credit I took in originally. So I'm like, well, I'm fine taking on a 4-cent loss for this week if it goes up to 122, and it didn't. I got out of it, and then it's up to 126 now. So, hey, it's Apple. It just keeps going up.
Yeah, that's true. Speaking of stocks that haven't really gone straight up of late, we do have Groupon reporting after the bell today. We'll keep an eye on those. They closed right around 7.5 or so in today's session, selling off a little bit. That 7.5 straddle going out right around $1.05 or so. So expecting a little bit of move, a little over 10% in that name out there. We'll see if that does indeed come to pass. Meanwhile, we'll turn our attention to the Viceroy. Mr. Jacobson, what caught your eye in today's slew of green activity?
Well, a couple things, and as much as we kid about Apple, think about this. Apple right now is almost 10% of the option volume in the industry. It's just amazing. And if you think about it, Cisco had earnings today, and Apple still traded 5x versus what Cisco traded. So. Apple is become the darling of the community. What else caught my eye today? Well, the social networking threesome were quiet today. Ironically, LinkedIn was down a little bit. Facebook was down when I last looked, and Twitter was up a little bit. But the oils rallied today. Oil was up, I think, about 4 or 5% after a little bit of a schizophrenic week. It's kind of moving in 4 or 5% clumps. But just about everything was up today, and I think I'd go back to Mike on this. But how big is the 2100 level going to be on the SPOO? Is that going to be a big psychological level, Mike?
Well, I think so. I think that, along with, because it's the 2093, I believe it is. Let me bring my chart up here. I believe it's 2093 is the all-time high. I think it's definitely going to be a big mark at the 2100 level, but even before that, we could go past 2093 tomorrow, and if we do that, we're obviously at new all-time highs. I think those are the two marks that I'd like to see tomorrow. If we can break through 2093, then break through 2100 going into the weekend, just gives me it's another case for the bulls. The last case for the bears right now is the 2093 level, being that we might be forming some type of a double top of some sort. But if we're forming a double top, we're doing it in a pretty rapid fashion right now. So we'll see where it goes.
Yeah, and this market, I mean, for the last year and a half, that's kind of been the way the market has worked. We'd take out an old high, there'd be some euphoria, then we'd correct 6 or 7%, and then everybody comes out and says, I told you so, I knew it, and then 5 weeks later, we're taking out another high. Dare I say NASDAQ 5,000? I mean, I talked about it a little bit last year, and I'm saying NASDAQ took out a 15-year high today, but within striking range of 5,000, that's back in the days of the big tech rally, followed by the tech wreck. But it's just interesting to see these levels, and I think, like you, Mike, I have been kind of fundamentally bullish here, especially given the interest rate environment. And I think the S&P is easily able to breach 2,200 in the next few weeks. Ukraine, there's a truce today. It's probably the 11th truce, and nobody believes it, but it's starting to get expensive for Putin. And if the Ukrainian truce holds, we could do this. We could see 2,200 in the S&P.
Yeah, it's certainly not, given these levels, certainly not that far off, perhaps, on the S&P. Speaking of some other earnings, I mentioned Groupon earlier. It looks like the number is out. I said they were trading about $1.05 on that straddle, and it looks like the market, liking what they heard a little bit, it's up to looks like about a dime in the after hours. Not a heck of a lot of movement going on there, but another name coming out today on some interesting news. You may be familiar with them for their product they make. Listeners, of course, they make that uber addictive Candy Crush game that so many people love to play. I somehow have escaped the pull of that game, thankfully. I never really played it, but I know everyone and their mother seems to love it. This is King Digital Entertainment. Their, of course, ticker symbol King. Coming out after the bell, they closed right around 14 in the orders, up about 60 cents, already today. And in the after hours, up another $2.11, about 14%. That straddle went out, that 14.54. I love these split adjusted straddles. Went out for about $2.30 today. So they were expecting about a 16% or so move in the after hours. And looks like they certainly may be living up to that, and volume off to the races today as well, with a lot of call love, 10-1 on the call side, and looks like the underlying playing out that way as well. Groupon also had some heavy activity on the calls, particularly the Feb 9s really caught our eyes. About 22,000 of those Feb 9s going up. It was about $1.50 out of the money. Remember, their listeners, including about a 12,000 lot being blasted out for 8 cents. So it wasn't all upside call buying love. A lot of call writing up there. So maybe a lot of Groupon underlying holders saying, if we get up here, I'm out. So interesting to see all this paper. We'll, of course, keep an eye on these earnings as the show progresses. Meanwhile, we'll turn our attention to that most snow-covered of our panelists, the Rock Lobster. Mr. Rock Lobster, what caught your eye in today's activity, sir?
Well, a couple of things. So we were talking about, what was the cumulative PE of the top 5 market cap stocks in the NASDAQ in 2000? Probably, what do you think, Alex, 50?
I think it was probably higher than that.
Higher, right?
I'm going to guess 80 to 100.
Yeah, probably at least double. Yeah.
Okay, and right
some
now,
had no earnings, right? Some had no earnings, right?
And right now, like we're talking Apple, 16, Microsoft, 15, Intel, 16, Cisco, 8 or something like that. I mean, I'm not trying to make like the extreme bull case, but just the tech sector, for as ugly as it's been, you don't have outrageous multiples for some of those. I mean, of course, like Facebook is pretty expensive, and there's going to be some like Amazon, is who knows what, but they're the exception, not the rule right now. So all I was saying is, it would not surprise me if the NASDAQ reached an all-time high.
I apologize again. Andrew, do you know the name John Succo?
John Succo.
Famous trader when you were on the floor, ran the desk at Payne Weber. His claim to fame is he got the largest stockholder in Global Crossing to do a collar.
Oh.
and the guy was a billionaire. And for those of you who aren't old enough to remember, Global Crossing was, I think it can best be described as a fraud. But and in the tech wreck, I mean, this thing, if he had $1 billion of the stock, the market cap must have been 10, 20, 30 billion, and the stock went to zero. But Succo was on a plane with the chairman, and it's like, what do you do? What do you do? And I trade options, and it was like, I hate you, and you derivatives guys, you call me all the time, and John said to him, what do you do? And he says, I'm chairman of Global Crossing. And how much stock do you have? And it was like, $1 billion worth. And maybe it was only 980 million. And John picked up the cocktail napkin and said, you ought to hedge, and here's how you hedge, and here's the collar. And he said, die, go away. I hate you guys. We're the finest company on earth. And why would I hedge? We're going to be worth, whatever, 3x. And about 3 weeks later, the guy calls John and says, okay, cipher up one of these hedges for me. And the stock goes to zero. I mean, it goes to zero. And they had, I think, about 75 or 80% of it hedged. And this is another story I'm going to get in deep trouble for telling because I'm probably revealing material not public. Anyway, so, the guy comes out of this with $700 million, calls Suko and says, you run the desk at Payne Weber? And he says, yeah. He says, not anymore, you don't. He says, you work for me now. And that's how Suko got his own hedge fund with the proceeds from Global Crossing. When you talk tech wreck, was probably the poster child for the tech wreck, and also the poster child for hedging in hindsight.
Yep, and who else did that? The guy, Cuban, did that with his Yahoo stake, giant collar. And so, but the pricing, and also, in 2002, I think, you could have picked up the QQQ for $18. So anyway, obviously, when the market's falling apart, you got to be a buyer, like the last several years. And the case for it going higher, there's still a case for it going higher because the multiples aren't crazy. It doesn't mean that they're probably not pretty fairly valued right now, but it could go higher. So it will be interesting to see if we get some more earnings growth. Well, we'll go higher still. So. The one thing that I like today is I was just checking this data before. One of Mark's favorite things to see is he likes seeing new highs with new lows in vol. We're not getting an absolute new low in vol for VIX, mostly because the realized vol has been high and we've had the Greek thing is still kind of lingering. But I believe for 2015, we are closing at a low print for a VIX close right now with a new high in the market, which is, that's kind of confirming for a rally. So I know we have the weekend, we have a 3-day weekend coming, but they did kill VIX pretty hard with this rally. So we shall see, but I would not get in the way of this freight train. Let's put it that way. I'm not.
So you're saying 2x on the NASDAQ and at least 3 to 4x on the S&P is what you're saying right now. That's what I'm hearing from you. So bulls rally ho.
I think 2100 is a foregone conclusion, barring Greece destroys the EU. 2100 and higher. For sure.
I like it. Getting on the bull train. I think you've been drinking some of that Uncle Mike Kool-Aid. Interesting.
Well, I've been secretly bullish.
I like how you hide it. You come out of the closet as a bull.
A clandestine bull.
Yeah, I like it. Well, the one name that didn't have any bullish love today, that was one of the few names anyway, was Tesla, taking it on the chin off about 5% or so, about nearly 10 handles in today's trading. Was off even more, I think down to 193, closed about 202. Of course, I think that's probably what's going to happen when the CEO comes out and says they're going to spend a, quote, staggering amount of money on their new endeavors, even while they're still not making money. Maybe you should measure your words a little bit better and not say staggering amount of money that you're going to spend, because people tend to react negatively to that, as we've seen in the market. Again, Tesla taking it on the chin. The options lighten it up today to the tune, averaging lately about 100,000 contracts a day, doing 261,000 today. The numbers were a bit of a disappointment, as you might imagine. They were coming in at 13 cents a share, a loss. That was compared with 31% profit estimated by analysts, so a pretty large miss. And they've burned about $450 million in cash in that quarter, almost 20% of their total, and they're going to spend $1.5 billion total on capital expenses, even as they forecast to lose money in the year. So. Interesting question, of course. Where is all that money coming from? Interesting stuff. As you said, Alex, I'm sure Tesla is still lighting it up over there at OX today.
Yeah, it continues to be a big name, and people love him. I mean, he's just been, he's I forget the analogy, but it's the guy in Iron Man that they compare him to, Stark. And people love him. And even on our boards, people have been saying Tesla's overpriced, for the last $150. So right now he's still the darling, but, I'm, in addition to being a watch guy, I'm a car guy. And The car's intriguing. It's interesting, but he's got a lot of competition coming his way. So this new version has got to be extraordinary. And if he doesn't deliver on extraordinary, that stock's going lower a lot and quickly.
Yeah, he has certainly, his PR machine has certainly cultivated that Iron Man image. In fact, if you remember in that first movie, he has a brief cameo in it before anyone knew who the hell Elon Musk was. So he was trying to cultivate that image at a very, very early, it might have been the second movie, one of those two films. He was in them, definitely. All right, that's going to do it on that Iron Man talk. We're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it is time once again for the Odd Block, the portion of the show where we break down the weird, the wild, the woolly, the wondrous paper that is lighting up the old options market today. And we're going to some far-flung corners of the old options market today, listeners. So strap in as we move on to our first victim. This is everyone's favorite, Domtar Corp. I know, certainly one of mine. Ticker symbol UFS, because why wouldn't it be? Closing today, $45.09, up about $1.50 or about 3.5% today. So not a bad day here for everyone's favorite, good old Domtar. And what we saw in particular that caught our eye today was the 845. So a little bit longer term at the money. These are actually at the money calls, not our usual out of the money scoop, but a bit of an at the money scoop. Going up, and we profile them to start this morning 1,785 times for $1.80 paper buy-in. As the day continued, the volume continued with a total nearly 6,000, about 5,800 going up on that strike, all paper buy-in, all on open interest of just about 800 contracts and some change. So looks like some longer-term love here for good old Domtar. If you notice, too, Mr. Rock Lobster, looks like some March 40 puts went up as well to the tune of about 1,700 contracts. Those could be financing the calls, but look at open interest. Looks like about 1,800 contracts open. So it looks like someone may be closing out of those and perhaps moving on into some calls in April. What's your take here, Mr. Rock Lobster, on this call palooza with a dash of puts here in Domtar?
Well, of course, I love having a name where the ticker symbol has nothing to do
yes,
with the name.
You seek those out, don't you? Just for my benefit.
When I'm on balance of looking at a trade, I will always tip that way. First off, just for you, to confuse your poor head after your 13th show of the week.
Yes, it makes things easier.
These are the makers of Attends adult diapers. I guess they own lots of trees and they turn them into adult continence things. So I guess, do you call your company Attends or do you call it Domtar? Whatever you do. However, this looked like just a buyer of the 845s. Kind of coming in, I believe this is sort of after earnings. I'm not quite sure what the push was. Well, maybe not earnings. I could have sworn. Yeah, they just had earnings 6 days ago, something like that. Blew out their earnings numbers.
Yeah, this guy missed his chance to buy some calls. They were trading about 5 handles lower a few sessions back.
Exactly. And, and it's still going up. So this is a pretty a good offer. Anyway, the company itself it looks like a company that just makes a lot of cash. Imagine that. You grow the tree and turn it into some sort of diaper, you probably got good margin on that. So, and I guess that's what this Canadian company does. So just looks like straight upside spec. I think that those puts were closing, short put close. And it's just a company that's kicking some fanny. I mean, it pays about $1. What is that? About $1.50 in dividends. So again, I don't think it's a sexy addition to your portfolio, but you're probably not going to go broke owning the company. That's for sure.
Who knew when they were singing about the circle of life in The Lion King, they meant the circle from trees to adult diapers. This company.
I wonder if Disney can create a musical on that.
That'll be their next big commercial for this company. The circle of life, and they're cutting down trees, and there's a geriatric wearing a diaper with a big smile on his face, and everyone's happy. All right, we're going into a weird place. Let's just keep on rolling right on into our next name here. This is FireEye Inc. Ticker symbol FEYE, F-E-Y-E. Closing today, $39.63, up about $4 or about 11% on the day. So not a bad day for good old FireEye. And let's see, this name does about 23,000 contracts a day, so fairly robust from an overall volume perspective, and doing about 115,000 today. So lighten it up today, not surprising given the big underlying move out here. And we did just have earnings in this name, so this is an earnings-driven move here. And what caught our eye out here, once again, it's kind of a similar refrain here. And we're not loading up on out of the money this time. It's at the money once again. In particular, it was a little bit closer to home. It was the March 39s this time. Paper coming in, lightening them up, buying them to the tune of, let's see here, when we first saw them, 1,421 going up for $2.65. Like I said, paper buying as the day continued, more volume piled in to the tune of about 5,500 total, going up on this strike for prices all over the place because this stock was moving. Total, like I said, about 5,500, all that on open interest of 1,800 contracts. But if you look at the strikes out here, it was call palooza. 7,800 of the March 40s went up. 5,600 of the March 45s went up, which is interesting. That's only on 2,800 contracts worth of open interest. So that's clearly opening paper up there. So a lot of love going up. Even 325 of the March 50s. So a lot of call action going up here in good old FireEye. And if you wonder what they do, they made a purpose-built virtual machine-based security platform that provides real-time protection to enterprises and governments. So cybersecurity, a hot thing, as you might imagine, and certainly they're knocking it out of the park today. And looks like the options paper is saying probably some more room to run. Mr. Rock Lobster, what's your take here on our friends, Mr. and Mrs. FireEye here?
Exactly. This is actually one that comes up in our option pitch chat. It used to be a $100 name and has fallen on hard times since then, mostly because I don't think they can come up with a positive earnings number. But I guess today was better, and I think a lot of that real upside was some kind of overriding, but also like upside spec. And maybe they're not; these are call buyers that maybe they preempted what the show was going to be about kind of bullish upside paper, and they're going for it. So maybe they see stars, as far as how high we can go, but. At the time when I profiled them, those 39s were the busiest strike in March, and since added a bunch more paper. And the stock probably is only, from where we profiled, only moved about 20 cents. It had already kind of opened up a few dollars and kind of just hovered at that up $4 range almost all day. And everybody just, paper just bought a lot of calls and they didn't really go anywhere. So, I mean, it got its pop for today, but I think paper for the most part is betting it's going higher. A lot of it. Lot.
Yes, indeed, sir. All right, and we're going to finish things up here in the odd block with a name a few of you may have actually heard of. This is Morgan Stanley, ticker symbol MS, of course, closing today. Wee bit shy of $37, up about 1.5% on the day or so. That's the name it does. Also about 22,000 contracts a day, doing nearly 57,000 today. So another lighten them up day in this name. And what caught our eye out here was looks like a bit of a longer term close / roll out on the Jan put side. In particular, it was the Jan 2016 2732 put spread went up 10,000 times for $1. And let's see, looking at the open interest, there's 22,000 open on the Jan 32 puts and 17,000 open on the Jan 27 puts. It looks like either way this went up. This is closing. Mr. Rock Lobster, which way did this go up? Was this paper selling the Jan 32 puts and buying to close, or were they buying and selling to close?
I'm guessing that, again, like educated guesstimate, but they were selling the 32s and buying the 27s. So think of it this way. So you've got a year to go on the position. Would you roll up your short 27s into the 32s for the same price? Essentially, your 27s were worth 84 cents, but the spread's you're only going to get $1 for the spread. Would you roll that up or you just let your 27th die?
If I use the what would I do barometer whenever I evaluated odd block paper, I would none of it would ever make sense. Guys writing puts for a penny, rolling 6 months for 7 cents. I mean, there's all kinds of nonsense. So that barometer, I agree with you, yes, but this is the odd block after all.
So I'm just thinking this is most likely going to be opening spread paper. They're just selling the spread for $1. You know, thinking Morgan Stanley, right? Kind of the big rally is over for, you know, for the financials. You know, they kind of beat around a little bit, but we're not going to get that, you know, giant move that you had like in the XLF from, you know, $6 to, you know, what is the trade now? 25 or $26. And they'll just take their, you know, they'll take their 20% on 20% on risk for a year and say, thank you very much. And I think that's how they're going to play this one. They're just going to sell, you know, and that would generate a nice return for the year on this short put spread.
That would indeed. All right, and that's going to do it for the old odd block. And now it's time to keep on rolling right on into Alex's favorite portion, because it's time for the Express block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you heard the man. This is indeed the Express Block, the portion of the show where the Viceroy takes the reins and takes us behind the scenes into the land known as OX by Charles Schwab. Mr. Viceroy, what was cooking in the land of OX today, sir?
OX was firing on all cylinders today, and I spoke to John briefly. John Grigas, who used to be on the show, runs our trading desk. I think he's now managing director of trading ops. But one thing that came up today with some of the desk folks that they asked me to talk about on the show, and to sort of remind everybody, the OX desk is a free service. Now, what do I mean by that? Many brokerage houses, if you pick up the phone and execute a trade over the phone, there's a differential charge. The OX desk is free. And what that means is if you're hesitant about making a trade, or you've just been approved for futures, I did a futures webinar this afternoon, but if you've just been approved for futures and before you pull the trigger on the first trade, you're saying to yourself, what's the tick size, or how late can I trade this, or when is the day session? And I know people are real price conscious, and sometimes people will not pick up the phone, dial the 800 number to have somebody help them execute the trade. But at Options Express, the desk is free, so that if you've got a question about a trade or you want the desk to help you enter a trade, it doesn't cost you any more money. And we're one of the last firms on the street where that's the case. And I know this is going to sound biased, but I am biased. Our desk is predominantly made up, our desk in Chicago is predominantly made up of former floor traders or people who had some floor experience. And the great thing about being able to get access to folks like that is, I mean, they really did it. It's not, somebody sitting in a call center who, has got a big binder, and when you ask a question, they go to the right page. These are predominantly former floor people or people who have other industry experience, and accessing the desk doesn't add any incremental charges. And even if you use the desk, place an order, and then you want to cancel it in your electronic account, or it doesn't fill, at the end of the day it goes away, no cost for that. The only thing you ever pay for at Options Express in terms of trading is a filled order. So just a reminder, Grigas and his outstanding crew, I don't want to say work for nothing. They don't work for nothing, but Using the desk adds no additional charges.
Well said, sir. I'm sure a lot of our listeners didn't realize that. I think they probably just assumed, rightfully, at a lot of other firms, that you call up, get somebody to help you, it's going to cost you money. So that's it's an impressive little value add you guys tweak on there. And if you listen to any of our earlier shows, you know John and those guys, you know they're pretty knowledgeable on the space. Call up, take advantage of that, pick their brain. Tell them the Option Block sent you. They'll love to hear from you. All right. And with that, it is the Thursday show, so that means it's time for you guys to take the reins and time to dive right on into the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. You guys really rallied to the cause this week when it came to mail. You guys really outdid yourself. Let's see how many we could squeeze in. Some of these are pretty epic, so I don't know how many of these we can get to, but we'll get to as many as we can. We'll start off with an easy one. This one comes from Nick Snow. He's been, that name I recognize, he's been around on the Options Insider since the very, very early days, since we had forums and things, and he's been floating around for a long time. He writes, "Hello, Mark and other guests. I was wondering if you've ever put together a quick review of other people or newsletters in the industry. For years, I have come to Options Insider because it doesn't spam me, doesn't ask for my credit card, and above all, I find the information on all the shows greatly beneficial. There seem to be so many hacks out there ready to take others' money. I think it's time you rate a bunch of other professionals with a simple put or call rating, meaning that the company or person is worthless to listen to or actually useful. So of course the Options Insider will get a call rating from me since it's about the only premium I would be willing to purchase. Thanks again. Look forward to listening to you in the future. Sincerely yours, Nick." Well, thank you for that praise, Nick. That's very nice of you. That's an interesting idea. We've always toyed with that idea, and we kind of do that now to a degree at the Options Insider, but we kind of do it more in the affirmative way. What you're saying is kind of more of the negative way. And quite frankly, if I were to start going out there, we were at the Insider, and to start saying, hey, this guy is a scammer, he's going to rip off your money, we would have to have lawyers on retainer 24/7, and it would be just an endless legal battle that unfortunately I don't really want to wage on a daily basis. But we kind of do that in the affirmative now. If you go to our site or you listen to the people we have on our shows, we attempt to filter that way. People who we think are scammers, we're not going to put them on our shows. So if you come to our content, you listen to who's on our shows, you read who's on our website, you should get a feeling for people we say, hey, these guys are all right. They're at the very least not going to rip you off, and they probably know a thing or two about the marketplace. Whereas if they're not on our shows, I'm not saying everyone out there who isn't on our shows is not credible, but if they're not on our shows and you're seeing them out there in a bunch of other places and they're really hitting the hard sell angle on a lot of their promotional stuff, then you maybe want to think twice. Well, hey, how come they're not on our stuff?
Like a couple weeks ago, or a couple months ago, when we went to the Option Pit event, I can remember walking to the train station with Mark, and we had shared a walk together, and Mark actually went on a very long rant as to who some people he refused to work with. So Mark is definitely on the up and up on that one for sure.
Yeah, like I said, I wish we could do the latter, but it's kind of hard to go out there and start pointing fingers because then the lawyers get involved and it gets pretty nasty. We've also done something like that to a degree with that group I started called the Options Alliance. One of the stated goals of that group is to get the better actors in the space on board and to actually do kind of what you're talking about, creating a kind of good housekeeping seal of approval for the options market. So if there is an active retail educator out there or someone like that, they can become part of our group. We can verify them, and then at the very least we can pay, hey, they'll get our seal of approval. They're not going to rip you off, which is first and foremost what we look for. Then, of course, the efficacy of their content is also up there as well. But at the end of the day, you're right. There does need to be a lot of housekeeping in the option space. All right, I did a lot of talking here, and I'm going to do a lot more talking as we get to this mega question. This one comes from another one of our old friends, Tomabomb. I just love that handle. Whenever he writes in, I have to read his stuff because I love that handle. He writes, "Distinguished gentlemen," and get your listening ears on, guys. This is a mega one. "This is a follow-on to a question I posted a few weeks ago regarding a back-of-the-envelope method to price vertical spreads. Last time I got a vote of at least 50% crap." and I'm really shooting to get the crap content down to around 25%. The panel identified that his skew and vol estimates were the weak spots in my method. I'm somewhat disappointed on the skew aspect. I don't think there is any quick way to incorporate skew into a calculation on a napkin, so bummer there. But on to my real question. Some of the panel members speculated I might be getting my vol estimates from Delta. Not true. I'm not using implied either. In a large part, the point of my method is to remove any short-term noise to arrive at a stable or normal estimate. To that end, I will usually match my input vol figure to realized vol of over a comparable period. For example, I want to buy an XYZ 95-100 vertical call spread that is 100 days from expiration. 100-day realized vol is about 15%. I use that 15% vol input and calculate there is a 30% chance that XYZ will finish above 100 expiration. Therefore, $5 width between strikes times 30% would put the mid price of the spread around $1.50. Now, I totally understand the historical performance is an indicator of future, yada, yada, yada. The main goal here is to avoid buying when, historically speaking, prices are pumped or selling when prices are depressed. So there is my volatility angle. Admittedly, I'm still on a beat on the skew angle. I'll get back to you on that, I suppose. Gentlemen, estimates on the crap content. And he writes, sorry, Longo, I know this is a long question. I tried 3 times to make it shorter. Please cover this on the option block again if you can. Thanks, Tom. Well, this is an epic one. My voice is already worn out from reading that and from answering the last one. So I'll give you pride of place. Let's see. Let's play round robin and go. Let's go Tusaw this time. Uncle Mike, what do you have to say for our friend here, Mr. Tomabomb? If you recall, he wrote in that question, he wanted that kind of back of the napkin kind of vertical spread question. We talked about his maybe using deltas perhaps a little bit improperly as a probability thing. Alex voted as good. We kind of said it was mediocre. So that should at least refresh your memory, I hope.
Oh yeah, how can I forget the Tomabomb? I think instead of calling himself Tomabomb, I think he should call himself the Tomabomb.
Yeah, there you go. Set himself apart from all the other Tomabombs out there.
That's what I was thinking. So, the way with which I would look at this Tomabomb would be, what is your feeling on the stock? So if you're going to buy a vertical call spread for the 9,500 vertical call spread, I think to take it back a step, pretend before you even get into any of the step one, pretend you're a stock trader and determine how bullish you are on the call spread. And I know this is just kind of just a random example on XYZ stock, which is always my favorite all-time stock because it always does what you want it to do. But even before that, determine what's your feeling on the stock. If you feel that XYZ stock is the next Apple, then I would say, well, don't even mess with doing a spread, just buy a call option on it. So in terms of determining the vol skew or whether or not which way with which you want to calculate it, I think that looking at the underlying first is something with which to make sense. Because the bottom line is this: it doesn't matter how good the vol skew calculator that you're coming up with is. If the stock goes down, you're going to lose money on it. So I think that's the main thing with which I would do. In terms of whether this calculation makes sense or whether or not you want to do this for determining whether or not the $1.50 in this example would be a good price, I'm going to yield to Andrew on that one. But nonetheless, what I would emphasize doing is really looking to see what's your true feeling on the stock first before you even get into this.
Go ahead, Mr. Rock Lobster.
Oh, I got you. No, on this subject here, I think he doesn't want to pay up for too much for his call spread. And I think in general, call spreads almost always are a little expensive because the upside call is always cheap. You generally don't get a lot of money for selling calls unless the implied vol is real high. I think the better thing he had on this was he's looking at, implied vol and realized vol. And, one of the reasons you could buy and call an Apple is it's going up fast and the implied vol is pretty cheap. So take a look at, what this basically one standard deviation is for what the implied vol is giving you at the time. And if you're saying, wow, I think the stock could go up $10, but the implied volatility is only really pricing the move at, let's say, $3 or $4 after that cycle, you're thinking, wow, this actually looks cheap. So I like to look at things depending on to see if calls are really expensive or not, just based on what that implied volatility price is giving you at the time. And right now, let's say in Facebook, implied volatility all the way out on the term structure is as cheap as it's ever been. So Facebook's been kind of stuck here around this level. But I'm starting to buy calls because it's just so darn cheap. And if we actually do get any kind of a NASDAQ rally, I think Facebook should catch up or should start moving at some point. But I think that might be a useful way to do it. It's hard to really just say, my call spread is really cheap or my call spread is really expensive. At most, I would look at it on a base, like on a straight line vol, and just decide that way. So, but really, I think it's what you're paying for that chunk of premium that you want. And, ultimately, I would be kind of more in the two-saw camp. If the vol is cheap enough, you really buy calls, because that's the only time when you're going to get really the performance that you want out of them. Because generally when a stock starts to rip a little bit, you actually might get a little bit more expansion if the IV was cheap, and the call will actually start to accelerate in growth instead of kind of limp along when implied vol is real high. So I think that would be trying to be a simple answer anyway.
Anything on that, Mr. Viceroy, before we roll on into the Around the Block?
Yeah, I think I was the one vote yes when.
Yeah, you were the one person who liked it
when he first asked the question. And here's what I like. I mean, number one, he's got resources on his broker's website. At OX, we could do probability of touch. We could do the trade and probability calculator. But the guy's question was, this is a back of the envelope. Here's my methodology. And I like the fact that he was going through the thought process. Now let's attack the issue of vol, skew, understanding vol. Do I use implied? Do I use realized? Do I use historical? You bring true rocket scientists on this show. You bring the Blair Hulls and people like that on this show, and you'll have no consensus about volatility and skew and what it means. And Andrew's right and Mike's right, but kudos to the guy for having a methodology, and kudos to him for thinking it through. You want to get more precise? Listen, there's no smarter guy in this industry than Andrew, and he understands vol, and I agree with everything he said. But kudos to this guy for fine-tuning what he's trying to do. The only other thing I would say is wherever you're trading, and hopefully you're trading at Options Express, you have all those tools there. You don't have to do the back of the envelope. Go cipher it up on your mobile device. And you can see probability of touch, and you can see probability of getting to a specific price. All that hard work has been done for you already.
Well said, and Andrew will appreciate the check. Oh, you'll appreciate the check Andrew has coming for you in the mail forthwith. Meanwhile, we have to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Got to say, our listeners are really stepping it up in the mail department. We had many more questions, some of them 4 or 5 part questions to go. We could fill a whole show with listener questions if we wanted to, but crazy, crazy stuff. Let's quickly check back in on our friends on the earnings today. Groupon still off about 14 cents, so it seems to be underperforming. It's straddle, not really moving a heck of a lot out there, hovering right around 732 or so. King also still way on the north side, up about 250 to about 17 and a quarter right now in the after hours. So rally ho out there. Looks like it's just about hitting the extremity of its straddle. We'll see tomorrow on the open if it keeps moving or if that's pretty much the extent of it. Meanwhile, let's check back in with each of our cohorts, see what they're watching for the rest of the week. Mr. Rock Lobster, we'll start with you. What are you keeping an eye on for the rest of the week into the weekend, and how much of a check are you cutting to Mr. Viceroy?
It's a small check. I don't know if it will be enough to even buy, though, a watch band for one of Alex's super fancy watches.
You can use a new hat, though.
A brim on one of his hats.
Yeah, you can use the new hat.
Watching on the weekend, I think the only thing that seems to be holding stocks back is this Greece thing, this game they're playing with trying to, carve some money out of the Germans. I don't think they're going to get any, and I don't think the EU really cares anymore, to be honest. And I think the Greeks kind of figure that out. And I think that's probably why we have the realized vol we have. So a lot of things sort of happened recently to keep implied vol or push it lower. Ukraine settled. We don't have the Fed till the March expiration cycle again for the next meeting minutes. But these last ones seem to have been okay. So we're kind of in that area where there's not a lot of reasons for implied volatility to go higher. There could always be one tomorrow, but at least right now, it's almost like you're kind of knocking down the doors, all the reasons for vol to stay higher and for realized vol to stay higher. And you have a rally like today. So what I'll be impressed in is if we can, tomorrow, people just buy stocks again. Vol goes down again. And then I will, and I guess I'll just stay long because that's seems to be working.
It does. Speaking of going long, if our listeners missed it, we did indeed profile the King upside. That's why you should tune into the website in between shows here on the old network, because we profiled the big block of the Feb at 15.54, same strike we were talking about earlier. Excuse me. And the King going up with about 10,000 of them total going up, paper gobbling them up. So sounds like Mr. Rock Lobster, most of those buyers are pretty happy campers right now.
I think they're going to feel like kings tomorrow, as a matter of fact.
How long have you been sitting on that one?
Oh, wow.
All right, good stuff. And Mr. Viceroy, what do you keep an eye on for the rest of this week, sir?
Sooner or later, we're going to break out of this trading range, and when we do, this market is going a lot higher. We've done this for the last 14 months, where we hit a new high, we sell off 5 or 6%. Everybody comes out and says, "This is the big one, Elizabeth." And then we move higher. The 10 years at 2, I'm much happier that it's at 2 than it was in the 1.718 area as the 10-year continues to go up. And yes, one day interest rates are going to go up. Watch the brokerage stocks because they're very levered to the 10-year. Watching the price of oil, but watching these big psychological levels, 2,100 on the S&P, 5,000 on NASDAQ. We could do 5,000 on NASDAQ next week if it's a decent week. So psychological levels, tops that I think we're going to finally power through. Markets continue to be thin with the Monday holiday. I know people won't hear the show until late tomorrow, but tomorrow's going to be a thin trading day. People are going to turn it into a 4-day weekend. Markets are going to be thin, which means the moves are going to be exacerbated. Up moves are going to be bigger, and down moves are going to be bigger. So S&P 2,200, Dow 18,000, and when we get through 18, we're going to start talking about 19. So looking at the averages.
And Mr. Tusaw, take us home. What are you watching the rest of the week into the weekend, sir?
I've been waiting a long time to say this. Never in the entire stock market has there ever been a better time to sell than right now. However, I do believe the markets will be going higher. Like Alex said, I think we need to break out of this range, and we're very close to doing that. It likely will happen tomorrow if we have an up day. Just watching the markets, watching to see if we get through, like Alex said, the psychological barriers with which we have 2,100 on the S&P. And the other thing that I think is really intriguing to watch right now is if the market goes higher, if we just get a little bit of movement from oil, oil stocks would be a phenomenal place to be right now.
Yeah, that battle still seems to be going back and forth. WTI March futures closed over the 50 handle again today. They dipped back below recently, so it's been that back and forth over the 50 handle. I think that's where it's going to shake out to see whether we've bottomed or whether there's more to come on the downside. Unfortunately, there isn't any more to come of this program. That's it. That's all there is, folks. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Starting off with he who is buried in the snow so we can get going and shoveling. Mr. Rock Lobster, what's coming down the pike in the land the pit?
We have some free classes coming. Wednesday, the 18th, we're going to have a creating income from option positions. And then we'll have a follow-up class on that. That will be 2 hours that Mark and I will be teaching. So there's the free one, and then there's the pay one. And for some people, all Option Pit Live and above members get all those classes for free that they can pop in. But basically, just using options to create income in kind of non-standard ways, just something beyond just, sell puts.
And if you heard double of Andrew there, don't worry, you're not going crazy. It's just the Skype gods not smiling upon the snow-draped wastes of Maine. Let's move on a little bit closer to home. Uncle Mike, what's coming down the pike in the land of RCM?
As per usual, check our website for the upcoming events with which we have in person. We could be coming to a town near you, rcmfutures.com. And as per usual, if you are interested in working with an option type of person and you don't feel like you have the multiple millions of dollars with which to work with them, give me a call. I would love to work with you. 312-212-3531 or send me an email at mtusa@rcmam.com.
All right, and last but certainly not least, Mr. Viceroy, was cooking in the land of OX education and live events.
So many events that I'm just going to showcase a few. Next live event is Saturday, February 21st, live in Las Vegas with Jimmy Ruzan and his crew. And if you go to the event, follow Jimmy around for the rest of the afternoon so I can hear his blackjack stories. Tuesday, February 17th, Monday's an exchange holiday. Tuesday, Nina's going to do exploring multi-leg strategies, looking at 3 and 4 leg, really risk-managed strategies. Wednesday, the 18th, Nina's going to do trading platform and site tour. Then she's going to do part of her continuum on short puts. Then after the close, I'm going to do an idea hub. That's the securities side idea hub, not the futures side. And then Thursday, the 19th, Dan Gramson, my good buddy over at the CME, is going to talk about Europe and talking about how to benefit from what's going on in Europe via the futures market. All the events are free. Not only are they free, but we still have the promotion that if you're opening a new account, come to the site, $150 Amazon gift card. There are terms and conditions that apply. Some accounts won't qualify. It's got to be new money to the firm. But come to optionsexpress.com, navigate down the page, click on the Amazon gift card, and you'll see all the fine print. But Grigas has those cards locked in his desk. I did try to jimmy his desk open the other day, but he's too near the camera, so I know they're still there.
Well done, sir. At least you made the old college try. That's what's important. All right, and on behalf of the Viceroy and the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in such great and indeed epic questions. Keep them coming, and we'll see you next time right here on the Option Block. Just quick note, markets are closed Monday, so we won't be recording our normal show on Monday. We'll be back for our Thursday show. You'll hear it again on Friday. So we'll see you then for some more of the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.